silver manufacturers are hearing about the shortage of silver, and whether this shortage is real or imagined, it doesn't really matter. There's a worry. And so they'll be all diving into the market saying, we can't allow our production line to come to a halt just because of the 1 ounce of silver we need per car, for example. So if you're manufacturing a car and it costs $50,000, whether the silver price is $100 more or $5 more won't make that much difference. If it's $100 more, your car's going to cost $50,000 plus 100.
I think we'll be around 9,000 because I mean, gold is an interesting case because I'm short-term really bullish. I mean, we've actually been in a really strong momentum-based market where gold actually has now spent nearly 4 years in an uptrend, according to my momentum indicator. And that's almost a record. 4 years is the biggest trend we've had in gold continuing for. Well, silver's an interesting case because it's half industrial, half precious metal. So whereas gold is around 90% precious, 10% industrial, so it doesn't have as much downside in a recessionary context. Silver technically does because it's got that 50%, industrial side. I think that is a sort of hard floor in the market now for silver. $375, I believe.
Silver manufacturers are increasingly concerned about a potential silver shortage, and perception alone may be enough to move markets. As Clive Thompson explains, even a small amount of silver per car can trigger aggressive buying if supply fears threaten production line. Whether silver rises $5 or $100 per ounce barely impacts a $50,000 vehicle, encouraging manufacturers to secure supply at almost any price. Tom Bradshaw highlights silver's dual role as both an industrial and precious metal, creating a strong price floor despite recession risks. Silver now has a hard price floor around $375, driven by industrial demand fears and manufacturers stockpiling to avoid production disruptions. With gold in a historic momentum uptrend, silver may soon follow. Now, we present the clips from Theirs interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
I think we'll be around 9,000 because I mean, gold is an interesting case because I'm short-term really bullish. I mean, we've actually been in a really strong momentum-based market where gold actually has now spent nearly 4 years in an uptrend, according to my momentum indicator. And that's almost a record. 4 years is the biggest trend we've had in gold continuing for. It's the longest the trend's continued for, but we've had it for nearly 4 years. And for me, that's a sign of a very strong market. And so short term, I'm very bullish. Medium term, I'm more bearish because I do see a US recession, obviously, this year. And as we saw in the 2008 crisis, when we saw panic in the markets and a liquidity-driven sell-off, gold did tend to sell off with the rest of the market. But having said that, gold was always the first to rise once the recessionary risks were out of the way. Putting together my predictions was very tricky this year because I had to factor in all these things. Because there's a lot of uncertainty, a lot of moving plates that you've got to analyze. But I potentially see the US economy actually struggling into a recession before the Fed chair is selected. So I think the Fed will be cutting into an environment where the economy is already in recession, over the first half of this year. So that, I mean, even if the Fed cuts towards zero, the other thing to remember is the real damage is on the Treasury market, for borrowers. The Fed doesn't control the long end of the curve, and long end rates obviously dictate mortgages, borrowing rates, and that's what will dictate basically how loose or how tight financial conditions are. Well, silver's an interesting case because it's half industrial, half precious metal. So whereas gold is around 90% precious, 10% industrial, so it doesn't have as much downside in a recessionary context. Silver technically does because it's got that 50%, industrial side. And at the moment, my models say that silver is around 86% overvalued, which is similar to levels we saw in 2011 and 1982. And both of those led to around 75 to 80% crashes in the silver price. Now, I'm absolutely not forecasting this because we've broken out of an exceptionally bullish long-term cup and handle pattern, which has formed over 45 years. We broke out of that pattern just last year. So we're very early into this bull market. But I do think something in the magnitude of what we saw in the 1974 to 1976 period, sort of maybe a 45% correction could well be coming. I think potentially a retest of $50, but nothing. I think we have broken clear of 50. So I think that is a sort of hard floor in the market now for silver.
And you see over $200. So you had a precise forecast. What was it, Tom?
$375, I believe.
Gold and silver markets are entering a decisive phase as analysts weigh momentum against recession risks. Gold has remained in a powerful uptrend for nearly 4 years, one of the longest in history, signaling strong bullish sentiment in the short term. However, expectations of a U.S. recession and liquidity-driven sell-offs could pressure prices temporarily. Silver, split between industrial and precious demand, appears overvalued by historical models. Yet its recent breakout from a 45-year cup and handle pattern suggests a long-term bull market is just beginning. Analysts now see $50 as a hard floor, with long-term targets stretching toward $375 despite potential corrections. Let's get back to the interview.
The price of silver in Shanghai and in COMEX, New York. So the red line at the bottom shows us the price at COMEX is $83.22. For silver, that's an all-time record. We closed on Friday at around $79.30, and we've opened this morning at nearly $84. So over $4 higher than the close on Friday. Now, that's a huge leap for the price of silver. If you think back when silver was sort of $30, we got very excited by a jump in price of 50 cents. So we just had a leap in price of $4 on that 79.30 price. It's gone to 83.22 at the moment in New York. Now, what's interesting is the Shanghai price has been climbing all morning since it opened around midnight European time. So we're looking at the Shanghai near-dated future here, and you see it's at an all-time high of 92.08. The chart we're looking at is a 1 minute by 1 minute chart here. Now, if I spread it out to a 1 second chart, you'll see that Shanghai looks like it's stopped trading at the moment. There you are. See this flat line here? That kind of looks like it's maybe it's a lunch pause. I don't know about Shanghai times, but it's temporarily paused, whereas the COMEX price is still moving around. I'll put that back to the 1 minute chart. I think we can look a little bit longer. Let's look at it. Yeah, I just need to adjust that so you can see that better. Auto fit scale. So as you can see, that shows us the difference between the Shanghai price, which is in green, and the COMEX price in red, and the gap in between the two is the difference. So it was very little difference, but as of now, the difference is at an all-time record. From 92 to 83, that's nearly $9 of difference. It's got to be a record. Let me put that back to 1 minute chart now. So there we have the 1 minute chart. So in green at the top, it's the Shanghai price showing 92.07 at the moment, and in red at the bottom, showing the COMEX price of 83.23, both all-time records. And just for information, gold is also hitting an all-time record. It was a little bit higher this morning. I just put it up there, 4567 is the latest price. And we go back to where we were. So there we have the Shanghai price in green at the top at 92.07 and COMEX at 83.24. What's going on? Why is the silver price soaring so much? Well, there was an artificial intelligence video came out over the weekend. It alleged as it has done on many occasions in the past, that a major bank is in deep, deep, deep trouble by being short too many ounces of silver. Silver manufacturers are hearing about the shortage of silver, and whether this shortage is real or imagined, it doesn't really matter. There's a worry, and so they'll be all diving into the market saying, we can't allow our production line to come to a halt just because of the 1 ounce of silver we need per car, for example. So if you're manufacturing a car and it costs $50,000, whether the silver price is $100 more or $5 more won't make that much difference. If it's $100 more, your car's going to cost $50,000 plus 100. So they can't let the production line halt for lack of silver. And hearing all these stories, I think a lot of silver consumers in terms of manufacturing are saying we can't rely on just-in-time supply chains. We need to secure enough silver for a bit longer than that, just in case we can't get our hands on it. So there's probably this rush going on by manufacturers to make sure that they're first in line to get the silver while they can still get it. And what's the evidence for a shortage? Well, the widening gap between the Shanghai price, here the green at the top, 92.08, and the COMEX price, 83.32, widest ever. This tells us that there must be a problem somebody's got a problem laying their hands on physical silver, because historically the gap has been 50 cents a dollar, occasionally a bit wider, but when there's a gap between two marketplaces, the large bullion banks can simply pile a load of silver onto a plane, and it can come out of London or New York and be in Shanghai the next morning, ready for delivery to arbitrage away the difference. But that's not been happening. So why aren't there plane loads of silver flying to Shanghai to take advantage of the much higher price in Shanghai? Well, to me, I think the reason is the silver isn't really easily available. It's not there. Now we're going to look at, move over now to look at the COMEX delivery notice and how that's been going. I had that up on my screen a few minutes ago, but let's just have a look now at that. So here we see the COMEX delivery notices in 2024, 2025, and 2026. I'm going to focus for a minute on the January numbers, which in January 24 it was 1,360 contracts were delivered. 25, nearly double, 2,370, and 2026 5 times as much as 2024 so far. And January's not finished, by the way. At 6,800 contracts were called for delivery. When it's called for delivery, it means someone somewhere is taking physical delivery of the silver. They want it for manufacturing or some purpose. So we can see that whoever it is who's taking delivery, we can't know that. There's more and more people want delivery. So this is not just one manufacturer. It could be a mixture between manufacturers and savers and investors and hedge funds and family offices and high net worth individuals, and maybe the US government itself, who knows? We don't know who's taking delivery, but what we do know is collectively there's a lot more silver being demanded for delivery this year than last year, because we can see here in the January line the number of contracts coming to maturity is increasing a lot.
Silver prices are surging to historic highs as market stress intensifies across global exchanges. According to analyst Clive Thompson, COMEX silver in New York has hit over $83, while Shanghai prices have reached an all-time record above 90 toes, creating the widest price gap ever seen between the two markets. This unprecedented divergence signals growing difficulty in sourcing physical silver. Clive explains that fears of shortages, amplified by viral AI-driven rumors and rising industrial demand, are pushing manufacturers to secure supply at any cost. Record COMEX delivery requests further confirm accelerating demand for physical silver, pointing to a potentially structural supply crisis. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.